Bitcoin is not quiet because nothing is happening. Bitcoin is quiet because big money is hesitating. At the Calm Metrics, we do not look at Bitcoin as one isolated chart, because Bitcoin usually moves inside a much larger liquidity machine. And right now, that machine is sending a warning before the crowd fully understands it. Over the last few hours, the strongest part of the market started to wobble. AI stocks and big tech, the same names that carried the risk-on story, began to lose momentum. That matters because Bitcoin does not need a direct bad headline to get stuck. It only needs the money behind risk assets to step back and become more careful. This is why Bitcoin is still trapped near the 63K to 64K zone. The level itself is not magic, but the behavior around it is important. Sellers are not fully breaking the market, but buyers are not taking control either. That kind of silence can become dangerous when the market has no fresh fuel behind it. Many retail traders look at this range and think Bitcoin is simply waiting to pump. But the better question is not whether Bitcoin can hold one green candle. The better question is where the next wave of real demand will come from. Because without new money, a stable chart can quickly become a liquidity trap. Bitcoin ETF selling pressure may have cooled compared with the worst moments. But less selling is not the same thing as fresh buying. The market does not only need the bleeding to slow down, it needs institutions to return with conviction, size, and a reason to take risk again. And right now, that conviction is still not clear. The Fed remains a pressure point, yields are still important, and the dollar can still tighten financial conditions. If money managers believe rates may stay higher for longer, risk assets become harder to chase. That is why Bitcoin is not trading alone here. Bitcoin is connected to the same liquidity machine as Nasdaq, AI stocks, Treasury yields, oil, and ETF flows. When one part of that machine starts to shake, Bitcoin often reacts before the story becomes obvious. This is the core idea behind the Calm Metrics. Price is only the surface, but liquidity is often the real message. So the signal today may not only be hiding on the Bitcoin chart, but inside the weakness of the assets that used to lead the market higher. This is what makes the current setup uncomfortable. Bitcoin can look stable, while the foundation underneath it is still uncertain. The price can hold for hours, even days, and still fail if new demand does not arrive. That is how traders get trapped by a chart that looks safe but has no real fuel. If AI stocks recover, if yields cool down, and if ETF inflows return, Bitcoin can move fast. But if big tech keeps cracking and liquidity stays cautious, this range may become a warning. The market is not saying Bitcoin is dead. The market is saying Bitcoin still needs permission from big money. So the next move is not about one candle. Watch whether AI leadership stabilizes, whether ETF demand comes back, and whether Bitcoin can hold 63K without looking exhausted. If big money returns, the breakout can become real. But if big money keeps flinching, this quiet Bitcoin range may become the trap. And that is exactly the kind of signal we track here at the Calm Metrics.